Good afternoon. It's the day after Christmas, December 26th. Hope everyone had a happy Christmas and Santa was good to you. So, what are the markets doing? I got the risk market here, kind of looking at the profile of the risk markets. Where are they? Where are they likely to go next? We got the indexes here, ES, NQ, and the Dow. S&P, NASDAQ, the Dow, YM, and then we have the Bitcoin, which I'm using continual contract for Bitcoin to get better older data points. You can see that Bitcoin is pretty much inside of last week's range. It did poke against the high. The high on that one, the high on Bitcoin being for this week is 90,610 on the CME. And the high last week was 90,565. So it did put in a higher high on the weekly. And it's most likely going to see ES close at the highs and above the prior week's high. Same with NASDAQ, NQ, and then inside on Dow. But positioned, clearly this is a bullish chart. Charts are bullish. Bitcoin, not so much still. So let me look at the spot chart. Let's dig in right here. I'm not really concerned about what's going to happen this month. There's only a week left in the year. So I'm really focused on what is the market doing? Where is it likely to go? What has it done? And essentially, who's been profitable? And what's the market going to do to unseat those who've been profitable? That's what I'm looking at. And looking to capture a good chunk of 2026 move. So, November candle on the monthly chart, large candle, at having a small inside December candle. You can see that we're staying in the lower half. So we're just chilling in the lower half here. Not really doing a whole lot. So I'm watching this inversion fair value gap right here on the monthly. And what I would want to see, and what I want to see is next year to open, January open, trade higher, which will be tradable, a tradable bounce, a tradable bullish move, and then that eventually gets sold into targeting the April low, which is going to be the 2024 low. I could probably pretty much change that right now. I'm pretty sure it's going to be the 2024 low. We can double check that. Yeah, it is. I'm sorry, the 2025 low. I don't even know what year it is. See that separation between these two candles right here? Right in there is going to be a nice target. Obviously, the November low, if it's going to hit that, then I'd be looking for it to reach these old all-time highs, the 96,000 here, with my terminus being 49,050 and a penny. That is the terminus. It's the max where I think this move is going to go if we see a prolonged bearish move. That's what I'm looking for. I could be wrong. We drop down to the weekly chart. Inside the weekly chart, I've been watching this range for weeks now, the November 17th range, and breaking it up into quadrants, you can see that the market's basically just churning, chopping back and forth inside that. Daily chart, you can see that we are below the 50%. It is below the 50%, but it's not doing anything. It's basically, it's not selling off. It's just consolidating. I'm watching this imbalance right here. As the market lost it here, you would expect a bullish market to utilize it as a premium array and send prices lower. Well, it's sort of doing that, but it might be making a failure swing. So what I'm watching for is the market to find some support in here and start to trade higher to break outside of this range. And I'd like to see that early in Q1 2026. But as of right now, could this thing just be rolling over? It could. And that is something that I'm not looking for. I don't want it, but it's totally possible to happen. Honestly, what I want is to be a part of a bullish move, trade back up into here, 95, 950. Find resistance up in here. Could trade, for me, it could trade all the way up to 102. I'm not thrilled about that. I wouldn't be thrilled about that, but I would want to see that the market, as far as thrilled about that for the bearish case, the higher it goes, the less likely I would be looking to see that this market, and it depends how it trades there, is actually going to go to these levels down here. But that's long-term trying to determine, are we going to get a massive quarterly move on this to capture a trade that you could sit in for quite a bit. And to me, there's nothing in the chart saying that Bitcoin is not going to go lower. Nothing's saying that. So it's almost looking closer like it's going to roll over. I don't like the idea of looking at it to do something like this and just putter out and just roll over. It could totally do that. But I don't like the idea of that. My thesis that I'm saying right now is it's churning liquidity, meaning it's engaging buyers, it's engaging sellers, and people are putting their stops above and below the market. And what I would want to see is anyone who has been part of this sell-off from October, whatever portion they have left of this trade, if they're still pushing it for it to go all the way down, to 69,000 or take out the lows here, I'm looking for them to be knocked out of their position, whether they're trailing their stop loss or they got in late and sold here. I'm looking for the market to unseat any of those people who've been profitable, any of those traders who have been profitable or trailing their stop loss, and I want to see it move higher, take them out so it can send prices lower. That is what I want to see. Obviously, that's a little bit high. I don't want to see that go that high, but you get the point. More like that would be as high as I would like to see it go. But finding some sort of resistance in here where the market will continue its selling. That's what and I want to see these lows stay intact. Now, if it breaks down here and does that mean if it takes out this December low and then goes higher, does that rule out the case that it's going to go lower? No, but I'll be looking for it to go lower. I'm not going to just start selling. I'll be looking for the market to shift, have that change in the state of delivery and shift to it going lower. But as of right now, and this is definitive, this area and price, the market is unable to close candles above the 50%, leaning towards heaviness. So, I'm going to drop down to a 4-hour chart. Inside this 4-hour chart, I'm watching this wick right here. This fair value gap, inversion fair value gap right here, which I have measured out. The market took out this swing low here, left that one, took out this swing high. So this is the current dealing range we're in, from this low to that high. Now, from that low to that high, the market has already traded down into a discount, found a discount array, and it just smoked the lows right here. So I'm leaning towards this thing is going to actually start making its move higher. So that's what I'm leaning towards right now. I don't know if that's going to happen, but that's what I'm looking for. As long as this area in price is holding 4-hour candles and the market starts trending higher from here, so let's just say it does not revisit the midpoint of this. I'll make these a little bit bigger. You get some exact prices. Closures below 86, 420, 429. Closures below that. Does that negate this from working? No, but it starts raising an eyebrow saying maybe this idea is not the strongest. Closing below 85, 791. That would lead me to believe that most likely not going to work out. And to really, if I was in the trade long, I really wouldn't want to be in it. I'd be looking to potentially just cut my losses, get out. But what I do want to see is this sell-off that took place. I want to see the market erode away from it. It just doesn't have to do it fast. It could just slowly just churn its way up. And it looks like that's what the market's doing. So we'll see what it does. But as of right now, there's not a whole lot to report. It's not doing anything. It's just churning liquidity. It's really just inducing buyers and sellers to get in this market, place their bets in the middle. It's going to take out one end first, and then most likely take out the other end. So if this low gets left and it just sweeps these short-term lows here, and it leaves this low, then the market is most likely, if it just sweeps, let's just say this low here, or leaves it intact. Like it could totally just leave it intact. If it leaves it intact, or just sweeps these lows here, this never low, and starts trending higher, we'll be looking for bullishness to trade all the way up into here. First, 95,000. Well, it's actually going to be 94,640. We look for the December's high to be taken. Then 95,950, and then working in this range here, and up to here. So essentially, to get a precise, actual, objective number, I would be looking for 70.5% of that range to be filled in. And that would be 99,529. Which puts the market trading right up into this area right here, anywhere inside this box. If and when the market trades up here, it's not perfect. But I'm going to make this red. I'm going to be looking for the market to start rolling over and selling off the trend lower here. Well, what if it just blasts off? Well, if it just blasts off, then I'm never going to get an opportunity to get short, and I will be looking to position long in this to catch that move higher. To me, that's a big enough trade. That's a big enough move to put on some risk and trade from anywhere from 92,000 to 88,000, getting in anywhere in here to trade it all the way up to there. That's a pretty decent move, and I would use intraday levels to have a pretty tight stop. So that's what I'm looking for, and that's what's going on. The market is simply just these blue lines, this upper and lower quadrant of that weekly move right here, that November move. It's still in there. It's trading below the 50%, which is not ideal in terms of bullishness. However, the caveat is it's not breaking down. So, and I don't think the market has done enough, moved up high enough. That's why my base case is not just rolling over and just doing something like this and just rolling over. That's not my base case. It could totally happen. I'm more interested in the market repricing higher to take some liquidity above the marketplace, because anyone who's been profitable in this move, they have a position left. I'm going to think early 2026, they're going to want to knock them out and then take this thing lower. That's what I'm going to be looking for and I'll be watching for. And I would like to participate on that move higher and on the move lower. Now, whether that happens or not, I don't know, but that's what I'm looking for. And as of right now, it's a scalper's market, and I don't scalp this market. So, but that's what I'm looking for. So I'll be watching this inversion fair value gap right here. If the market is able to get above it, I'll be looking for the market to reprice to it or just continue going higher, reprice to the top end of it, stay in the upper half, and go higher. That's what I'm looking for. And that would signify we had a failure swing right here. The market failed to make a lower low, which it did here. So what we still have in this market is because that low has been left intact, this low right here from the 1st of December, the market is still actually structured on this run where it set a low, a higher high, which is a higher low, and a higher high. These two lows right here, I would be looking at it as just skipping that and looking at it like this. A low, a high, a higher low, a higher high, a higher low, and then this next move would simply be the higher high. Granted, it's choppy and it's kind of subjective, but that's what I'm looking for. But this area in price, this little orange shaded box, this to me is telling me the story. And the bodies are staying underneath it, which is a signal of weakness, but it's not breaking down. We're not seeing large range candles, shallow retracements. We're not seeing the breakdown take place. And that means, to me, that a higher time frame move, a higher time frame view is needed. And support is building in, but it's really just churning liquidity. That's what I'm looking for. I don't really suspect that move to be happening this year. And that's a wrap.